Hey guys, welcome back. Today we are going to solve four important chapter problems. One from each. We'll solve from appeals, advanced tax, transfer pricing, Kappu method, and then I think I missed to switch on the record. I'll just repeat. Okay, Matthew Cherian is the resident individual, reputed surgeon. Okay, assessment year is 24-25. Completed under 143 subsection 3, which is scrutiny assessment. Okay, and then 15th September 2025, he has the assessment has been completed for him. Okay, and then the split assessment order and a notice demand has been issued on 20th September 2025. In the assessment, assessing officer disallowed certain deductions. Okay, this is the uh, assessment order receipt date. Within 30 days we have to file an appeal, which is 25th October, but we filed appeal on 15th November 2025. Okay, so since he was outside for the period of 1st September to 13th November, he has a sufficient grounds for the delay filing. Sufficient grounds of reasons for the delay filing with JCIT appeal. So this is the legal remedy for the second question answer. The first question answer is 30 days we have to file. Within 30 days from the date of receipt of assessment order. The third question is time limit for disposal of appeal by CIT. Okay, the time limit for disposal is there is no specific time limit, but within 1 year from the date of appeal, the authorities will dispose of appeals. Okay, this is the point for this. And then whether any deposit of receipt to be made for additional income assessed by assessing officer. There is no mandatory limit of payment for additional income assessed. No, for the additional income assessed, there is no mandatory amount to be paid to file an appeal. It's not required. But in some cases it will be mandatory to deposit 20%. It's not required for appeal with JCIT appeal. Okay, that's it. The question, very simple scenario only. The thing is, we have to remember the provisions of certain provisions, and we have to remember these dates and the disposal time limit. We have to specify that within 1 year from the date of filing of, sorry, not of filing, from the end of financial year in which appeal was made. Appeal made on 25-26 assessment year. No, then 31st March 26. From this date to 1 year is the time limit for disposal of appeals. And then whether any deposit to be, okay, this is have covered, and these are the things we have to remember for this question. The next question will go. Next question is interest 234B and 234C. Okay, 234B is for short payment and short payment of advance tax, and this is short payments in terms of installments. 234C. Okay, now what's the tax payable on assessed income, which is 1,03,950. the assessed income is. What's the tax TDS, which is 36450. So the amount net amount payable by advance tax is 67,500. Okay, for the 4 periods, how much advance tax they have paid? 18,500 plus 16,125 plus 25,250, which is 59,875 is the advance tax they have paid. Whether is this 90% of the actual the required advance tax payment, that we have to check. So 60,500 into 90%, which is 60,750. 67,750 is still more than the actual advance tax paid. So he has to pay the interest for the period. How much interest? Difference between these two amounts is the interest the assessee has to pay. 67,500 minus 59,875 into 1 percentage into how many months we have to check. Before that, 67,500 minus 59,875, which is 76.25 is the shortage of amount. On this we have to calculate the interest rate. So first round of this, the round off factor is very important for advance tax. Okay, we have to round off to the nearest multiple of 100. Okay, so 76,000 7,600 into 1 percentage into how many months. They have filed return on 25th July. From the year end of financial year to 25th July is how many months? April, May, June, July, 4 months. So 7,600 into 1 percentage into 4, which is rupees 304 is the interest under section 234B. Then comes the interest under section 234C. Okay, 234C we have to calculate, because there is there might be a default also in this advance tax rates. That we'll check now. What's the period? Amount due, actual advance tax paid. What's the shortfall? On that, calculate interest. Okay, 15th June, 15th September, 15th December, 15th March. Okay, what's the amount due? We have to calculate. So amount due is 67,500 into 15 percentage or 12 percentage. Okay, in this case he hasn't paid any amount, so we'll calculate that 15 percentage itself. 67,500 into 15 percentage, which is 10,125 is the amount due. What he paid? He hasn't paid anything, so 10,125 into 3 percentage, which is 1 percentage into 3 months, which is 303 or 304. Okay, 303.75 came, so I just rounded it off. Okay, now next quarter, which is 15th September due is 45% or 36%. Here also, because he hasn't paid the first installment, so anyways we have to check the amount he has paid will be lesser than the actual amount due. So what would it become? 67,500 into 45%, which is 30,375. They have to be paid. What he has actually paid? 18,500. The shortfall is 11,875 into 1 percentage into 3 months into 1 percentage into 3 months, which is 356. Then 67,500 into 75% into 75%, that's it. 67,500 into 0.75, which is 50,625. What's the actual amount paid? 16,125. So previously he paid 10,500 plus 16,125. Total this rupees 34,625. What's the shortfall amount? 50,625, which is 16,000. is the shortfall into 1 percentage. Another thing I have missed to tell, which is we have to round off the shortfall amounts. Nearest multiple of 100. Okay, this is also nearest multiple, not the nearest below 100. Okay, lesser than 100 of that amount, which is here it has came to 11,875, right? So 11,800 will come here. 11,800 into 1 percentage into 3, which is 354. 303. Then 16,000 into 1 percentage into 3 months, which is 480. Then comes last month, which is 67,500. We have to be paid. What we actually paid, 59,875 we paid. Difference is we have calculated, which is 7,625. Nearest least amount of 100 is 7,600 into 1 percentage into 3 months, and 1 percentage into 3 months, which is 228. 303 plus 354 plus 480 plus 228, which is 1,365 is the interest amount. But the thing is, we are in the March. From year end only we will be charging interest. After year end, 234B will come. 234B will start the interest charge of from the end of financial year to the year to the period of return file. So we have to charge interest for only 1 month for this amount. So 7,625 into 7,600 into 1 percentage into 1 month, which is 76. 303 plus 354 plus 480 plus 76, which is 1,213 under section 234C. Then another problem comes, which is from that problem is over. Okay, that's it. We have to calculate first the interest for the difference between the whole amount, and then we have to split by installments, and installments how much mismatch we have to find, and then we have to charge the interest. That's it. Then comes transfer pricing. Very interesting question. Okay, J Incorporation Limited, AE, which is Korean AE, and CD Limited, which is Indian AE, and then JKF Incorporation is the Nepal company. Okay, so in the year CD has transported 250,000 units of cellular phones at rupees 3,000 per unit. But the same guy transferred 35,000 units to JK and F Incorporation at the price of 5,800 only. So at the price of 5,800, so it's increased. They transported only less amounts for the less sale price they have transferred, but for more sale price they have transported to the non-AE. So we have the price per unit of controllable uncomparable uncontrollable transaction price, which is rupees 5,800. What else have been given in the question? Sales of J Incorporation are on free on board basis, but whereas the sales free on board means from the factory itself, J Incorporation will take care all the expenses from that. Okay, that's why they are saying that. That's why the price is very low here. But JKF Incorporation is not like that. It is CIF basis. For insurance, freight, everything has been paid by the everything those part has been done by the CD limited, so they have charged for the CAF. That's why the price is higher, they are saying. Okay, so okay, how much CAF they would have costed for that amount, that we have to check. They are saying CD limited is saying that 700 we have charged from JK, that is also part of this amount. Okay, we'll deduct that, which is 700, no, CAF. And then another thing they are saying, sales to JKF Incorporation are under free warranty for 2 years. They are giving CD Limited is giving 2 year warranty to JK, but to J Incorporation there is no warranty. They are saying no warranty. So for the extra warranty also we are charging some amount. That's why this amount is very huge. Okay, what's the warranty cost? Warranty cost is rupees 500. Okay, take that also. Remove that warranty. Anything else you have? The estimate, the since J's incorporation order is very huge in volume, so they have given the discount, voluminous discount they have given, but they haven't given the voluminous discount to the JKF Incorporation. Okay, you have given the voluminous in volume discount, that is also you will remove. We haven't given the volume discount, so that's why the price is very huge here. So discount, okay, you will give discount for the this guy also. What would be the price will come? $5,800 minus 700 minus 500 minus 200, which is 4,400 is the arm's length price. Okay, arm's length price, that has to be sold to Korean company. But how much we have sold? We have sold it for 3,000. What's the difference? 1,400 rupees per unit is the difference. Increase in price per unit. How many units of units sold? Just 250,000 units have been sold. 250,000 into 1,400, which is 35 crores. Is the increase in sales. That's it. The problem is over. Next problem will go. I hope you guys have understood this concept. The thing is, they have sold something lesser to the associate enterprise, but they have sold at the higher price to the non-associate enterprise. When we are asking for a reason, they are saying this much reasons. Okay, we'll validate all those reasons. We'll cut short all the prices. The remaining value you have to show it as a transfer price. That's the amount is that's the reason for this 35 crore increase in the profit of the company. Then comes the last question, which is RP Limited. RTP Limited, which is from tax planning, the December 25 question paper. Actually, this part is many people would have made a mistake in this because of some one little nuances in this. Nuances in this. Okay, we'll see what's there in this question. Domestic company incorporated and operational from May 20. Okay, they have been assessed to tax as per normal provisions. Tax rate at 30%. The board of directors want you to take note on the following data and suggest whether to continue with the same or opt for 115 BAB. The company's income from the business for the year end is 1,500 lakhs before reduction. Okay, it has been assessed as per normal tax provision only. You have to be note of it, take a note of it. And then additional depreciation they have, brought forward loss they have, deduction under section 80 JJAA is for employing new set of people, increasing the employee base. For that government is giving the deduction. And then 80M is deduction regarding the intercorporate dividends. Okay, what's the income? Income is 1,500 lakhs. What's the additional depreciation we have? 125 lakhs. What's the brought forward loss we have? 700 lakh. Remove everything. Remove everything. 1,500 minus 125 minus 700 lakhs, which is 1635 lakhs is the gross total income. What's the deductions under deductions under chapter 6A, which is 80JJAA? How much deductions? 50,000, sorry, 50 lakhs. Then 80M, which is intercorporate dividends, 25 lakhs. Remove those things. 600 lakhs is the net taxable income. Tax liability at 30% plus being 600 lakhs, this is 6 crores. So 7% surcharge would be levied plus 4%. So total 600 into 30% into plus 7% plus 4%, which is 200.3 crores is the tax liability. Yes, okay, this is as per normal provisions. Now we'll check the other thing, which is 115 BAB. No, 115 BAB. Before starting the provisions with the 115 BAB, you have to see the question that on May 2020 they have incorporated the business. It has been assessed to tax as per normal provisions only. What's the eligibility period to opt for 115 BAB for the company which is incorporated on May 20? This is till May 2021 only. Eligible here to make themselves opted with 115 BAB, but they have been opted for normal provisions for the past this month for the past 5 years almost. But now they are asking for a suggestion to opt. This is not allowed under the provisions of income tax, so they can't opt for uh, 115 BAB. That's what this question is saying. So no BAB, no 115 BAB provision is there. So they have to pay a tax liability of 200.3 crore itself. 200.3 lakhs. Okay, so this is what I wanted to tell you, that this is the thing. So you guys have to be careful in this part. If 115 BAB, now we should not eyes closed, we should not do this. We have to see these two lines very crucial. Okay, when it comes to BAB, we have to check the year and also whether they have followed whether they have previously, this line have been given, whether they have previously assessed with the normal tax provisions or like that. Any points are there, we have to check, then only we have to solve this type of questions. Okay, that's it. Thank you.